Hello guys and welcome to my YouTube channel. Today I'm showing you my Trading 212 Dividend Growth portfolio. My portfolio currently has a value of around 3,450 euros, what would be around 3,200 Great British Pounds. So as I have already mentioned, I'm a dividend growth investor. So let's start with my first holding. I hold 1.5 shares of Apple. I started buying it back in September and have since averaged into it, and at the moment I'm 9.7% in profit. But as we European investors probably all know, we have quite a nice loss in FX at the moment, so my real gain would be 12%, but due to the strong euro and the weak dollar, I'm actually losing 3% in FX. My whole portfolio has roughly 3% FX loss, so if I would have invested in dollars, I would probably be up at around 7% at the moment. So my next holding is AbbVie, a pharmaceutical company. So I'm not gonna lie, one of the main reasons I bought it right here. It seemed very much undervalued, and if you scroll down, it has a 5% dividend yield, which at the time when I bought it was just a deal I couldn't resist. So next up is AMD. I'm also holding some growth companies because AMD isn't paying a dividend at the moment, and I'm just a big believer in AMD. You know, at the moment they are crushing their competitor Intel, and I just wanted to get involved in the company, and at the moment it's working out quite well. I'm up 5%, as you can see, almost 8 if we wouldn't have the FX impact. My next holding is 0.1 of a share of Apple, but this share is traded, as you can see here, on the German stock exchange. And what I'm hoping here, as you can see, the buy price is in euros. I don't have a FX impact. So in the future, basically, I think if I want to buy some American companies, I check if Trading 212 has also their shares which are traded at the German stock exchange, and therefore I rather buy the German share than the American share. Next up is AVGO. I'm holding 0.35 shares. AVGO is a semiconductor company, and as you can see here on the 1-year chart, right before COVID hit, it was at $324, and at the moment it's trading at $430. Just insane growth. And to me, AVGO is the perfect dividend growth company. As you can see, the 1-year graph, it's up 36%, so it has a nice growth, but has a very nice dividend yield of 3.3% as well, which is very rare to find. Next up is Cisco. I'm holding 2 shares. It's one of my weaker performing stocks. I bought 1 share right here before they reported earnings, and yeah, I remember their earnings weren't that bad, but the outlook of the future wasn't rosy, and so the share plummeted, and I bought my second share right here. So I have an average price of $45. And at one point right here I was down almost 20% on the stock, but since then it has recovered quite nicely, and it has a very nice dividend yield of 3.6%. Next up, I'm holding almost half a share of Facebook. Facebook is another stock that doesn't pay a dividend and what is purely a growth play for me. But as you can see here, in the last 4 months, the stock hasn't really done much. And yeah, I'm at break-even point. Wouldn't there be the FX impact? Next up is a company that not many people know probably. It's Corning. It's a glass manufacturer. If you're watching this video on a smartphone, most likely this company is making the glass of your front screen. And as you can see here, I bought right here in October, and it went then down quite a bit. But after that, and as you may know, the vaccine, the Pfizer-BioNTech vaccine, has to be stored at minus 70 degrees Celsius. And Corning is the provider of the vaccine vials. They can resist those low temperatures. So I have quite a bullish outlook on this company. And it also pays a nice dividend of 2.4%. Next up is Hasbro. I think everyone knows what Hasbro is and what it does. It's a toy manufacturer. And you know, the stock was beaten up after earnings. I think I bought it in July. I just thought I buy 1 share. What's the worst that could happen? Pays a nice dividend of 3.2%. And as you can see, since August it's up 13%, and without the FX loss, it would be up almost 17% for me, and has already paid me twice in dividends. So yeah, I can't complain too much. Next up is Home Depot. I own 0.64 shares of it, and yeah, not really much to say. It had a big run up, as you can see here, because the home building stocks profited quite big from the COVID crisis, because people were locked at home and they wanted to make their home nicer, essentially. And yeah, also not much movement for the last 4 months. You could even say in a downwards trend, but I have a positive outlook for Home Depot. And if it goes down, I don't mind too much. It pays a nice dividend, so you know it's easier to hold onto a stock if it pays you a dividend. Then we have, I think, my biggest loser of my portfolio with minus 10%, which is Intel. I own 2 shares of it, and yeah, look at that 1 year graph. It's been a horrible year for Intel. I bought right here at an average price of $50, where they announced in their earnings call that their newest processors will be delayed by almost a year. And yeah, since then it had recovered, but it went down again on bad earnings, recovered again, and went down again. It's a mess of a stock, but I'm holding on to it. You know, it's a massive company. You know, 224 billion market cap. You know, this company won't go anywhere in the next 10 years. And it pays a nice dividend yield, so I won't sell out of my shares anytime soon. Next up, we have Johnson & Johnson. Again, I think one of the most boring companies. Is a pharmaceutical company. It's a dividend aristocrat. It has a pretty flat price movement. If you look at it, it's only 4.6% up over the year. I'm personally up 4%, but again, FX impact 3%. So yeah, basically almost no gain, but a 2.6 dividend yield. So next up, we have my only financial holding. It's JPM. I think it's the best American bank at the moment that you can hold. And as you can see over here, it's still down 10%. I decided to buy it in early November, and I'm up 4%, and it has a nice dividend yield of 3%. And I think in the near future, I will increase my position, because as you can see here, they have quite a low PE ratio. You know, a PE ratio of 20 is seen as a healthy ratio, and this would indicate that JP Morgan is quite undervalued at the moment. Another boring stock I'm holding is Kimberly Clark. I'm down quite a bit on it, 9.6%. And yeah, I mean, it's a boring company. It's not the most volatile stock. It's a company that produces personal care, consumer tissues. So it was quite in demand during COVID, but since it has declined quite a bit, so yeah. You know, I'm sitting this one out. It has a nice dividend yield of 3.2%, which makes my loss a little bit sweeter. Next up, I'm holding 1 share of Coke. Again, not really much to say. It's a safe company with a nice dividend yield of 3%. Then I'm also holding a little bit of 3M. It's a consumer goods company, very stable, nice market cap, and an even nicer dividend yield of 3.45%. Then we have one of my biggest positions in Microsoft. I'm holding 1.1 shares of it. I'm up 2% at the moment with a FX loss of 3%, so I'm on the stock itself, I'm up 5.5%. And with a company like Microsoft, it pays a dividend, but it's also a huge growth play, because the current dividend yield is 1%, which in the eyes of a dividend investor isn't insane, but I think you should have the right mix of companies that still have lots of room to grow and are providing you with the cash flow of a dividend. Then I'm also holding a quarter of a share of Netflix. Netflix doesn't pay a dividend. It's a simple growth play. As you can see, Netflix is quite volatile, and I'm just waiting for the next big push up, which in my eyes is just a matter of time. Then I own a company that I think everybody knows, 3/4 of a share, Nike. It's a big growth play. As you can see, it grew 40% year over year, quite low dividend yield of 0.8%. It's the same principle as for Microsoft, low dividend, but still a company that has lots of room to grow in share price. So next up is Realty Income. I'm holding 2.5 shares of it. I think it's fair to say it's one of the most popular dividend stocks. It's a real estate stock, and unlike most other stocks, it pays the dividend monthly and not quarterly. So 12 payments a year instead of 4 payments a year. And as you can see, the stock is trading literally flat for the last 6 months since June. But it has quite a nice dividend yield of 4.4%. And as you can see here, every month dividend paid, November dividend paid, October dividend paid, September dividend paid. It's nice to see cash coming in every month. Next up, we have Pan American Silver. It's a silver mining company. It pays a very, very small dividend yield of 0.8%. But basically, I'm holding it kind of as a hedge against inflation. A lot of experts out there are believing that silver is about to shoot up a lot because of all the money printing that's going on. And so I want to be exposed to a silver mining company, and the choices you have on Trading 212 are limited, and Pan American Silver, in my opinion, is the best company that Trading 212 has in terms of silver mining. Then, if you're holding Coke, you also have to hold some Pepsi. No debate, please, which drink is better. Everyone is entitled to their own opinion. And yeah, as you can see here, also as you can see here as well, a very boring company, not much volatility, solid dividend yield of almost 3%. And yeah, not much you can do wrong with holding Pepsi, I think. The one thing I like with Pepsi a little bit more than with Coca-Cola is that Coca-Cola is only selling beverages, and Pepsi is selling drinks, of course, but also snacks. So in my opinion, it has a better diversification, and that's why I like Pepsi more as a dividend stock. Next up, we have Procter & Gamble, another consumer staples company, very flat the last 4 months, in a downwards trend for me, -6%. And yeah, half of the loss is due to FX impact. Then we have here my biggest holding and my best performing holding, luckily. It's Qualcomm. I own 2.15 shares of it. I first started buying the company right here at $90. It was right before the earnings, and they blew it out of the park. And ever since then, the stock is flying. In my opinion, Qualcomm is the biggest 5G player that you can buy at the moment, and they have, in my opinion, a very bright future, and are also paying a nice dividend yield. Next up is Raytheon Technology. I'm holding only 3/4 of a shares. I just wanted a little bit of exposure to the aero sector, and as you can see, it was just hit like crazy from COVID, from $150 per share down to like $50 per share. And yeah, almost the only reason I bought it back then was it has a 3% dividend yield. And as I said, I wanted a little bit exposure to the air sector, and I didn't want to buy airlines. Next up, I'm holding 1.1 shares of Starbucks. Also a solid dividend play. I'm up 13%, 3% FX loss, and yeah, 1.7% dividend yield. And I think the company, once COVID weakens, I think the company will thrive. Then we have my second real estate holding, Store Capital. Very nice company, very good CEO. If you do a little bit of research, I like the guy. And yeah, I'm up more than 11%. I'm owning 3 shares, and it has a nice dividend yield of 4.4%. So next up is a stock I think every dividend investor holds. It's AT&T, a communication service provider. And yeah, look at that price action. It's basically trading in a range of $33 down to $26. Not much growth to expect from it, but it based that juicy 7% dividend yield that you just can't resist. Next up, I'm holding 1 share of Taiwan Semiconductor as well. And as you may have seen by now, I'm holding quite a lot of semiconductors. AMD, Intel, Qualcomm, AVGO. And I just like the space. I think it's one of the industries with the biggest upside at the moment. And like every semiconductor company I own, they're paying dividends. And Taiwan Semiconductor does it as well. 2.2% dividend yield. Just what I like to see. Next up, I hold 0.9 shares of UPS. As you can see, UPS, due to COVID, due to everyone staying at home, it grew like crazy, 44% year over year. I'm still very bullish on the company. It shows that I'm 2% down, but that's only due to the FX impact. And it pays a nice dividend yield of 2.3%. I don't have any reason to believe why the uptrend on UPS should stop anytime soon. The last stock I own is Visa, a credit card company, trading very flat over the last few months as well. I'm up almost 5%, minus the FX impact, I'm down to like a 1% profit. And like with Apple and Microsoft, Visa is a dividend growth play. It only has a dividend yield of 0.59%. The dividend history of the company is still pretty young, but the company still has a lot of expected growth, so the share value should increase over time, and with that they will hopefully raise their dividend year over year as well. Last but not least, I'm holding 2 silver ETFs and 1 gold ETF. X82 and X86 are silver ETFs and X85 is a gold ETF. I'm basically holding them as a hedge against inflation. So in theory, silver and gold are doing very well when currencies like the dollar are doing bad. And as you can already see with the FX impact, I'm losing quite a lot of money because I'm investing euros into dollar, and I'm holding these ETFs basically as a hedge against inflation. So that was my Trading 212 portfolio. Here you can see my allocations sorted by their. Here you can see my allocation details. As you can see, my top 3 are Qualcomm, AMD and my silver ETF. And followed by Microsoft, Apple, Home Depot, UPS, AVGO, Realty Income and Facebook. And the other companies make half of the pie. So this was my Trading 212 portfolio. I think I will update every time I do big purchases. And if you guys have any questions or recommendations, let me know in the comment section. And see you next time.